probability trading strategy, you're full of crap.
If things aren't working, then that's a quick trip to the poorhouse.
To learn how to drive the beater before you can drive the Lamborghini.
Now you're playing with the house's money.
Hey, good morning, everybody. This is Dennis Wilborn from, I'm coming from Hawaii. I know it's afternoon on the East Coast time, but I'm out here on an island all by myself, and I get lonely. But I've got two great friends today to be chatting with, and I have to ask you a question: have you ever thought you had to pick a style? Excuse me, I'm in the wrong part. That's okay. That's what happens when you do it live, folks. And so, hey, most traders chase signals, they copy strategies and fear risk. But what if the real edge has nothing to do with any of that? Today, we're talking with someone who flips the script on assumptions and just turns them upside down. Right now, we have Lia Holmgren joins us on the call, and she's going to basically just destroy 3 lies that traders keep falling for. And what it really takes to trade with power, precision, and purpose. And so, Mike, you just want to introduce and just do a little bit of short background on Lia?
Yeah, Lia, welcome to the show. It was so great meeting you. What was it, a week or two ago at the StockTwits Hashtag Awards.
Hello, Michael. Hello, Dennis. And hello, everyone. Thanks for having me on.
Yeah, absolutely. So we learned a little bit more about you. So Lia is known as Lia the Trader over on X and on StockTwits. Is a stock and options trader and trading psychology coach who leverages her background in counseling to guide traders in mastering emotional intelligence for market success. She holds a master's degree in negotiation and conflict resolution from Columbia University and founded Trading Mindset and Data to empower traders with data-driven strategies and psychological resilience. So again, Lia, welcome to the show. It's great to have you.
Thank you so much. Really excited to be here and discuss all sorts of fun topics.
So Lia, when did you first realize that the typical approach to trading wasn't working for you?
Well, I realized it really fast.
Okay.
I think my very first trade I took, I lost $50,000 on, which was about 6 years ago. So it was absolutely awful decision. I was greedy. I had no idea what I'm doing. And that's when I realized that, okay, I need to actually learn this. This is not just like, okay, let me buy something and see what happens.
Wow.
Yeah.
So, and Mike shared your story. Is there anything, your story is just phenomenal in that you were day trading, right?
Well, I do more swing trading, but when there is a really good A+ setup and I see momentum, I would take a day trade, but it's not my specialty. I'm more a swing trader. I like to hold stocks, momentum swing trading. I would describe it that way.
Okay.
Yeah.
So, what's some of the most common, and we're going to get into a lot of this stuff here shortly, but I know that Mike and I, our heart goes out to people who are starting because we think that oftentimes they fall into a situation where they either they think they need to know more than they really need to know to trade well. So what's the most common illusion traders have when they first start out? Because you've been trading for now, what, 8+ years?
6 years, and I've been investing in individual stocks for almost 15. So it's kind of also very similar psychology, but I started doing very active trading 6 years ago. And I just do believe that, there are so many mistakes people make and what they believe in. There are so many wrong beliefs. And the one was, that risk management will cap your gains. That's like a very important one that I think people believe in, and it's not true, because when you don't have risk management, sure, when the market is great, which this year wasn't, and I believe a lot of people were losing money this year, it's a difficult market to trade. But when market is just straight on bull it's very forgiving, right? So whatever you buy at some point is going to go up. With this strategy, sure, it works for a bit, and then at some point you just give all your gains back and even more. And most people have that story. They try to trade. So I do believe risk management is extremely important, and trading is simple, but not easy.
Yeah.
Like there's not a rocket science or some magic formula someone needs to know. It's a simple elementary math of risk management and how to do it. Yet so many people struggle with that because of the psychology that we cannot manage and control.
So so what you're telling me is that it's not so much the mechanics, but it's the mindset.
Well, it's combination of both, right? But you can have as best of a system that you possibly imagine. You can have anything perfect, right?
Right.
But your mind is not going to execute, and you're going to break your system. You're going to micromanage. You're going to make micro decisions every day when you trade. So there are ways to go around it, but it's not easy, and people are stubborn. And then, of course, we have the greed. That's why people oversize because, I buy 1,000 shares of these stocks. And they don't really think about what can I lose. I think when you're a trader, you're a risk manager. That your number one job is how much can I lose? And does this trade make sense for me? And most people don't understand. This is shocking for me after 6 years and being coaching for over 3 years now. It's shocking to me to know that 99% of the traders I talk to do not understand how to actually look at risk to reward in trades.
Gotcha. Go ahead, Mike.
Yeah, no, I think that's interesting because one of the questions that I was going to ask is that so many people tend to come into trading, I think, with the wrong idea or kind of like maybe underestimate how difficult that it could be. I'm curious, how many people do you see that actually come in with a good mindset from the jump, or even have proper structure when they're first starting out? Does anybody even come in with that kind of mentality, or is that far and few between?
It's truly fascinating, but I didn't know this. The very first time I started trading, as I said, I had that unfortunate trade, which I just saw that Delta Airlines were really down, and I thought it's a great time to buy. It just kept going down. Anyways, I lost money. But then when I started trading, the number one thing I was struggling with, and I couldn't find the answers to it nowhere, and I was listening to Investopedia on YouTube and all these podcasts. How many shares do I buy? I did not know. So I just started buying 100 shares of each. That doesn't work. And a lot of people do it. They just buy 10 shares of each or 100 shares of each, and they do contracts of each, for example. That's not going to work, right? Because every stock has different price, and then you're losing inconsistent numbers. And I do believe that the losses need to be consistent. That's number one. And I've never seen someone who would have, at least the people that I worked with and people also in Discord, they do not understand this basic. And they will never be able to be profitable this way if they don't understand super basics.
Yeah, you're absolutely right. Isn't it just incredible how something like that, position sizing and risk management, it's so fundamental to be able to actually make money doing this over the long term and not blow yourself up. But it's not what you hear when you initially come in and you start Googling or trying to figure out, well, how do I do this? Right? It's something that you end up hearing later on.
Yeah, later on when it's too late. Thankfully, this was really one of the first things I learned right at the beginning, because I'm a math girl. I wanted to know, I'm like, how the heck how much I'm going to buy? Like, what do I do here? And I couldn't find this answer. It took me maybe 2 months of research to find these answers. So I didn't want to trade because I didn't know when I'm going to keep buying 100 shares of each. So, it doesn't make any sense. So then I learned this very, very early. But then what I found out is, okay, now I know this, but why I'm not doing it? Because again, it's the emotions. And then my psychotherapist in me kicked in. I'm like, hey, wait a second. This is what's happening. And that's why I think having the background of therapy and understanding human psychology and even the negotiation with yourself, that what's happening in your mind. Like you need to know yourself, what kind of person you are. And a lot of times people think they are succeeding in certain business or they're good in something, but this is not going to work in trading. It's completely different animal, completely different.
Right on. Yeah, it's I run into people who have a very successful career, and they want to say, hey, well, I want to switch to trading. I want to learn how to trade for a living, if you will, or trade full time. And they really have no clue as to what that really means, because here it is, let's say they've spent 20 years collecting a paycheck every 2 weeks. And guess what? When you get into trading, that's not going to happen. I mean, a set amount every week, because and I like to compare it to, it's a lot more like commission sales. Like sometimes, you have a wonderful, great month, and other times you have a crappy month. And to basically build that into your business plan. And I find a lot of traders say they don't approach the trading as a business, because they don't know that that's what they should be doing right off the get-go. So that's awesome. So is it true that okay, I was studying you, and I saw that you had lost $400,000 day trading. Is that a true statement?
Yeah, it's true. So the first years I said that there was the loss, and then I learned, and then basically that first year I made about $500,000 trading, but that was just pure luck because we had raging bull market. That's what I'm saying. And I thought, oh my God, I'm Stanley Druckenmiller here.
Yeah.
I'm like going to be a billionaire soon. This is great. And then of course, beginner's luck. Next year I lost it all. And the issue with this is also then you have the taxes to pay. So
yeah,
that was quite annoying. And that's when I literally took 3 months off. I sat down with myself. I said, okay, well, now I have to really study what happened. And it's just a simple thing as everyone else does. Like buy stocks, you look at 1 or 5 minute chart. Now you see a 3% dip, but you think, oh my God, this is a great dip to buy. Then you buy it, then you don't have a stop. So the thing keeps dipping. And then you suddenly keep buying because you're like averaging in, which is this human psychology that we all have. Well, let me lower the average price.
yeah.
Suddenly you have these humongous positions of stuff you don't even know, and then you say, "Oh, it's okay. Well, I will just hold it."
Yeah.
And you turn your trade into an investment, and then 2 years pass by, and you're down 90% on skills or on some stupidity that Katie Wood was buying in 2020. It doesn't matter, or someone on Twitter, or X. So it's just
they call those involuntary long-term investors.
Yeah, exactly.
Suddenly everyone was an investor.
So my question my question is, okay, that's a huge pain point, right? Now you have been trained, because you're a psychologist, right?
Yeah.
Right.
I was
so
psychotherapist.
Psychotherapist. So you've been trained to help people get through their own pain points, right? So what kind of a psychotherapy session did you have with yourself? And it sounds like it may have lasted several weeks or months to get to the place where you could step out in a more healthy way.
Well, it was very hard because, of course, I'm someone very proud and I love winning and I'm very competitive, and I had to admit that I lost, and I had to admit that I made a horrible mistake, and I had to cut my losses, and I had to understand that this is just, it happened. There is nothing I can do, and realizing that I'm holding a bunch of crap, I have a chance to wait and hope for 10 years. I'm just going to cut my losses and stomach it. And it took me about 3 months to stomach it, to be honest with you. And I was bitter for a year. I had to keep living my life, of course, and be nice to my partner and my family and everyone. So it took a lot of inner work, to be honest with you, and a lot of walks and meditations and hating myself in the process. But it was absolutely amazing learning experience, and it was just 22 started being really excellent year, and since then it's been just really good. And I know that there are times that I have to slow down. I know myself. I know that, like, for example, today I had a really strong day. We had extremely powerful day. So I took my gains and I told myself, I'm in euphoria. And I'm going to enjoy this euphoria. I'm going to enjoy my gains, and I'm going to just take day off, because otherwise, you are in euphoria and I would not do it at this point. I still have emotions, which I'm a human. I'm not going to get rid of my emotions, but I'm not going to react to those emotions. And this is a big, big problem with a lot of trading coaches and people talking about psychology, or you see people on social media say, you can't have emotions. That's not going to work. We are humans. We are based with emotions. Like, you can have algorithm you program that will trade for you, or you have to understand you will have emotions, but you are not going to react on it. Oftentimes you want to kick someone, but you're not going to kick them because it's not okay. And you might have that feeling.
but in my lifetime, I have slammed a few doors and that kind of stuff with my trading. But hey, one of the biggest myths is a lot of times people think that strategies and styles are set in stone. They basically get honed into this is the way I'm going to trade or whatever. Have you ever thought you had to pick a style and stick with it forever? Because, and you made a statement that, you said that my style evolved every time my season of life changed. And so, how does that fit together? I mean, it's because clearly you went from day trading to swing trading. That's a big change.
It is, yeah, because it didn't work for me. So I had to change what I was doing. I learned day trading is not for my personality. I do not like it. I don't like to trade on small time frames. There's a lot of trial and error. You have to be very quick. It didn't work for me. I was getting fast heart rate. Of course, that is then flooding your emotions. I wasn't able to be deciding fast, and I was just flooded, and I wasn't making progress. So I changed it and I swing trade. But again, it's not set in the stone, your strategy. So for example, this year, I knew with the changes in administration from the past administration, I knew that swing trading will be a little bit more difficult. We had increased volatility. We have low liquidity in the market, which means we're going to have erratic moves, and we're going to have, I cannot trade the same settings I had for my swing trades last year, right? Because I will have overnight moves that will not only be below my stop loss, but massively below my stop loss. So I can sit on my hands, or I'm going to trade different vehicles, like I would trade VIX this year, or I would be selling options. I would be selling option spreads, call spreads, put spreads. This is my second specialty. And I adjust it to the market. Or I would take half sizes of my positions, just half our risk. I would have giant stop losses when I trade breakouts on a day, which is a swing trade, but I would give myself very tight stop loss because it is choppy. And I want to make sure that we have enough of volume and power to get through, because in this kind of market, the breakouts are getting more fake outs and stopped out than any other time. So this would be the adjustments I have to make. And what I saw in my, it's not a long career like you guys, 6 years, but I'm very observant and I work with people. So a lot of traders are stubborn and they do not realize that the market changed. And they keep trading the same strategy and are stubborn and inflexible to change the strategy when the market changes. And that's when they give all their money back. And look, not everyone can change strategy, especially when they are perfect, they're executing well and they've been doing it for years. But then I suggest just to sit on your hands. If you cannot be flexible and have other strategy that works in this market, then just don't trade, because why would you give back all your money?
Yeah, exactly. Like we were talking earlier, and one of the strategies that, with Dennis and I, for both of us, the way that we'll have a strategy, and part of the strategy tells us, well, when should we be in the market and when should we not be in the market. So for the earlier part of the year, I was in cash really since February, mid-February, and just starting to get back into the market maybe 2-3 weeks ago. 2-3 weeks ago, that's when I think that I put the this Netflix trade on, but
Smart.
but yeah, aside from that, that's basically how you stick to one strategy, and it's not that you're running just taking any kind of setup that comes. The setup's either there or it's not there, and we need to know when to be in and when to be out.
Yeah.
Absolutely. It was. I literally shorted the market with put spreads, in mid February, and
Awesome.
I was like literally, it was not the all time high, but the day after, because you just felt. I mean, look, this is not like I can time the market. We can't really time the market perfectly.
Right.
But I think it was fair to say that there was a time for some hedges and was a time to take some of your profits, because we just had insane 2 years. And
Sure.
and I think honestly, admin or not, the market would do this anyways, because I think that it was necessary at some point. We were just going way too fast, way too high, and that's the cycle of the market. We have to retest and take some gains and chop around for a bit. Yeah, so I agree with you, and I think once you are really a trader that is seasoned and then understand this basics, then you will not have FOMO and worry about, okay, I'm missing out, I'm not in the market. It's fine. There is always another trade. I'd rather be wishing to be in the market and have my cash and profits than being in awful market wishing I wouldn't be there.
Right on.
Absolutely. That's it.
Fine.
Yeah, that's an important point there. I'm curious. So, how do you help your clients discover, well, what their ideal trading strategy is? And to piggyback off of that question, if they find their ideal strategy, does that become something that sticks with them, or how do they evolve their strategy if what their ideal one was, the market changes and then it's no longer ideal, or some other part of life changes? How do you help those clients discover, well, what's ideal?
It's a very unique work, and I think a lot of times people do think what is their ideal strategy because they see it somewhere and they don't really realize it's not ideal for them. You know, it's kind of like the wishful thinking. Everyone wants to scalp short-term weekly options because they see 1,000% gains, but in reality, it's extremely low probability technique. So yeah, it's just literally like work with who you are, what you like to do, what is your lifestyle too. Because in my age, I don't want to sit 7 hours a day in front of the computer, to be honest with you. Like, I just don't. Like, I want to do other things. So for me, being there 3-4 hours is enough. I believe in 10 years, I want to sit there for 2 hours. You know, a lot of people have children, they're semi-retired or retired, they just want to play a little bit, and then they have to adjust it based on that. And of course, the portfolio size too. So like, you know, selling options is not for beginners. They have small portfolios. It's for someone who is holding investments for longer term, or they want to hedge, they want to play around with that. So I think it's very unique to explore with everyone who I work with. And yeah, I mean, that's pretty much it. Just to know who you are, know yourself, what you really want from this. That's the most important.
Right on.
Yeah.
And so, yeah, you guys talking about both strategies. I kind of approach it from a little slightly different perspective. I basically built I don't call it a strategy, I built my system. And my system is basically the foundation. And my system is what triggers my trades and all that kind of stuff. But then I lay on top of my system my strategies. And what I find, and that works out very well, because I'll have a strategy for options, I'll have a strategy for stocks, I'll have a strategy for ETFs, but they all trigger off of my system. And my system is what keeps me out of trouble. And system is my business plan and all that kind of stuff. And so, hey guys, if you're tuned in out there, basically there's a whole lot of different types of traders. We have day traders, we have swing traders, we have hybrid traders. So, hey, be stellar, put a comment down. Which are you? Day trader, swing trader, or hybrid? And so we'll see if any of you guys are near your keyboard so you can type that in. Just put DSRH in the comments. Look forward to that. So what about those darn technical indicators? they always guarantee that we have winning trades. I know when I used to use stochastic when I got started, they were always fantastic. But so oftentimes, um, you said in past that there is a phase where my entire trading plan was built around MACD and RISI crossovers. And I followed this religiously until I realized they only told part of the story and made me a reactive instead of proactive. So do you not use indicators now? I mean, if you just you're just looking at price action?
I do use them, but I'm not going to base everything on indicators. They're also lagging most of the time. So when it comes to indicators, I look at the moving averages. Of course, a lot of algorithms are programmed based on those. So we will have certain price action around. Of course, I'm not disregarding that, and I use them for reference. But it's not set in the stone, right? Sure, we know that from 200 simple moving average, a lot of times stock will bounce, but it's not 100%. So I still have to see what's happening on that day. If I have any sort of volume, if I have price reversal, I have to use my thinking there. It's not just like, oh, I'm going to just go long and now this is going to happen. It's never like that in trading. And this is, for me, really difficult to explain to a lot of traders because they think I will give them this special formula that's going to always work and they're going to just trade based off of that. It's not how it works. I love chart patterns, for example. For me, having a nice trend and having a chart pattern and breakout with a strong volume, that's pretty much what I would trade. Is it going to work out? No, maybe sometimes my win rate is 45, 50%, but I don't care because I have tight stop and I know what I'm going to lose. And then when the stock runs, I will try to stick with the stock for as long as the volume runs out, right? For a momentum, the momentum. So yeah, they're not set in the stone. They're a great guide, but we cannot rely on them 100%. And RSI MACD, yeah, that was my first ones I was trading with also. It's cute.
Okay, that's the first time I really said RSI is cute. Okay, that's cool.
We can be in oversold and overbought condition for a long time. It's a condition.
Yeah.
So.
And so you mentioned RSI, and at what point in your career did you kind of figure out that realize that indicators were misleading you? Because I know when I traded stochastics when I first began, I knew that when it did a reversal at the bottom, the stochastic, that was a great time to get in. But the huge mistake that I made was I would say, oh, I'm almost to the bottom. I haven't crossed, momentum hadn't shifted yet. So I'd go ahead and go in with a big buy, only to have it continue to go down. And since I didn't like using stop losses, I blew up a couple of accounts, and it didn't make my wife very happy. I mean, you blow up a six-figure account, that leaves scars,
Oh yeah, I know. Trust me. I'm glad I'm still married because after my last years, I was just talking about. Yeah. Anyways, when I realized that it's basically, people think oftentimes that this is very easy. They're going to just have this strategy, it's going to work. No, it's work. Trading is work. And, when I'm getting to that average or the breakout, I still have to do some sort of due diligence right there and see if I have other criteria that I want to enter this trade. Sure, you can program an algo and see how it works and see some results if you just go blindly in and then see. I tried to do that also. For many of those indicators, the results weren't that great. So I do believe, of course, you can have more complex and sophisticated algorithms, that's for sure. But I think you still have to do due diligence around those levels and see how you decide and then manage it from there. It's not going to just happen, on its own. So.
Wait, so you tried to program your own algorithm? I've never tried to do that before. Is something like that difficult to do? Especially for it sounds like you might have tried to do that earlier or relatively early
At the very beginning, yes. At the very beginning,
Yeah.
before I even started trading actively, I was looking, or constantly I was learning and looking at data. And we tried to do the RSI MACD, and it was a complete joke. The crossover, and like when the MACD goes below 30 or RSI below 30 to go long, and then sell when it's about 70 or 80, and that it just didn't do any. I also tried to do the inside candle breakout. That also the inside day or inside week is also not great. You get to about 50% chance of success, which again is just very lukewarm. So yeah, I mean, sure, there are a lot of things I would like to do, but as far as my knowledge was back then, it was very basic. So I would have to spend more time on it. And now, quite frankly, you can use ChatGPT for this too. So that will program stuff for you. You could play with that. It's really becoming easier at this point. Yeah. So, but in any case, for everyone listening, trading is an art. It truly is an art, and as you trade, and you have to be very patient. The number one priority is to not blow your account or go completely broke, because then it's really hard to trade if you have no money. Just managing risk, truly, but managing risk calculated way. Not like some people buy, and then the moment there is red candle, they're like, let me sell. It's also not going to work. That's not risk management. That's panic.
Yep.
And then try to survive and learn and try and keep doing, keep learning, keep researching and knowing yourself. And after some time, you will find the way that works for you. I promise. But it's going to take years sometimes. Yeah. And you have the right to adjust this system and get better and better and better and find a way for you to trade. So just truly, trading is a game of patience, of risk management, and of discipline. And discipline is number one. I suggest people, they are absolutely not disciplined and they cannot follow rules on their own or someone else's when they have to. I do believe this free-spirited kind of people will have a really hard time trading. And I'm just very honest with that. So
that's that's almost one of the criteria that I ask people before they join my premium service. How disciplined are you? What's your life like now? On a scale of 1 to 10, how disciplined are you? And if they, come score themselves at anything below a 6, I will not invite them into my system into my program, simply because, how you do anything is how you'll do everything.
Exactly.
Is my thought. And so, but you talk about risk management, and that's a myth, that concept of risk management limiting profits. What if I told you that risk management is the only reason I've stayed profitable? It's the only reason I'm profitable right now. And I look forward, you mentioned about taking risk off the table. The other side of that is that if I take risk off the table when I take profits at a certain percentage point, or I have my stop loss in place, I'm conserving capital. And so, Lia, just, what's the difference between, limiting losses versus limiting your upside? How do you, there's a balance there. How do you do your balance?
So limiting upside one can do when they are looking to trades that are poor risk to reward, right? So what I tell everyone is, look where this trade can take you. What's your runway? I call it a runway. Oftentimes people look and they want to buy a stock, but they don't really look rationally where is the resistance. So like you're risking $2 to make $1. I think that's poor risk management. And then even from that, because they have this kind of short runway, they take their profits too early. And that is where that's a poor risk management. And I think having trades with a lot of runway is what you want to be looking at, where there is not too much supply, the bag holders that are stuck there because they will want to sell the moment the price gets there. It's simple human psychology. We all did this at the beginning, or most of us, right? We have a bag and now we want is to break even. So at some point there will be thousands of people, they want to break even. So the moment the stock price gets there, they will unload their bags and the stock will go back down. So that's pretty much sure. You wanna take your gains, but you also don't want to take your gains also too early, right? That's another problem people have. So they don't They keep their losses too long, or some people, they will be good with taking the losses quickly, but they also will take their profits too quickly. And that is also not going to be great. Sure, someone says, oh, profit is profit. I disagree, because the only way you stay in the game is to understand the ratio of the risk, right? If you risk 1 to 1, and I make $1, when I lose $1, you have to be right more than 50% of time. The moment you find these trades that have long runway, you can make 1.5, 1.8, $2 on 1 year risking. You don't need to be right as often. And this is the basics that also a lot of people don't understand.
Wow. I love that concept of a long runway and a short runway, because I used to fly jets in the Navy, right?
Oh, nice.
And that's where one of the reasons why I call my service AutoPilot trading. And that's very interesting to say that, because when in the aircraft that I used to fly, we could only land on certain runways that were a certain length, because if the runway was too short, the airplane couldn't stop in time and run off the end, and nobody wants to run off the end. And I tell you that story simply because there is a direct analogy to that with with the way you trade. If the potential profit loss is not there, or risk reward is not there, then why take the trade? This is a runway. I'm not going to land or take off from this runway, because you know, at least with flying, you could possibly die.
Yeah.
And
your trade will die. Yeah.
You'll. And so
I did my VFR in 2011.
Oh, congratulations.
For 2 years, but then I stopped. I don't have the license renewed, but I did that back when I lived in Southwest. It was fun. It was a very cute time of my life.
So do you trade? Do you have automatic places where you take some of your profit, maybe not all, but some of your profit off? Because you talked about the risk reward ratio. Do you like if you have a 2 to 1 reward risk, do you make sure you take some profit off the table once you hit that 2 for 1?
For short-term trading, yes, I do it. And I have 2 strategies that I teach people depending on their personality. One is a little bit more conservative, one is more aggressive. The more conservative is basically to the point I get to 1.5 R, I take 50% of my gains. I usually structure the trades that they make sense and they have, as I said, runway. And then I trail the stop to break even. And then another 2 hours, you take 25%. And then you let the runners run and you trail your stop. And I have 2 free targets, and then I'm basically moving higher. And this last month, we are reaching the targets really easily because, again, the market improved since April 7th was the low, which I was adding humongous amounts of money into long-term portfolio. But that's different, right? If you leave it aside. But for the short-term trading, I like to have the targets because then you are stuck there like driving to location. You don't have a GPS. So I'm happy. And, again, beginner traders, they're like, oh, I could have stayed in this for longer. I'm like, yeah, could have, should have. This is not how you trade. You're happy you made the money. Trading is for cash flow and for short-term income that you want to pay your bills with. It's like a business plan. You're not going to be sitting there hoping that the stock can go up another 10%. That's for investing, right? That's a different strategy. So I have my targets. For the more aggressive one, what I suggest to do is you get to 2 hours or 1.5 hour, you get 30% off. And then you get 2 hour, you get smaller. So you're basically staying in the trades longer and you're not trailing the stop as aggressively, right? Because then, of course, you have more chances to make more money, but you also have a chance that the stock goes back down and you get stopped out after 30%. But it's to each their own. Whoever has the risk appetite for more aggressive, that's the way to go. Or you want to take your gains faster, that's how I do it.
Yeah. And so, I like to coach people in the aspect in that area is especially if it's a newer trader. I basically tell them you have to learn how to be a winner. In order to learn how to be a winner, you have to have some wins under your belt. So take that 10% or 15% profit, take it off the table. That means you won. And so you learn how to become a winner. And the other part of learning how to be a winner is to follow your system significantly. So, and So, Mike, what questions do you have for Lia in this area? Because I know she's got a bug out here shortly.
Yeah. Well, why don't we move to the lightning round if we've got time for that? Since we're
That
butting
sounds
up
like a winner. Okay.
All
Go,
right.
man.
So what's one belief you wish more traders would unlearn?
One belief I wish they would unlearn.
Yeah.
I think that the greed that they, if they don't have risk management, they will make more money. And if they, because with setting DR, you basically are buying certain amount of shares. And for many people, it might not be as much because of the account size, but I do want them to know that this is the way to go, and slowly, but go rather slowly than fast, and kill it all at some point.
Right on. Awesome. So then the number 2 lightning round is, what's your go-to reset ritual after a losing streak?
Okay, I had one in February, actually. I think I had like 7 or 8 trades, one after another, that was stopped out. I just stopped trading for a while and reevaluate the market, and realized that this market is just truly uncomfortable to trade and choppy. And I just focused on option selling instead of swing trades. Just literally take them off. That's the best reset for me, to calm down the emotions.
Fantastic. And what's one book or quote that's changed your trading mindset that you'd recommend for people?
I mean, it might sound boring. I read so many, but I really love the Reminiscence of Stock Operator, which really changed my life, was when he said, we are hoping when the trade goes against us, instead of hoping when the trade goes in our favor. We need to switch this psychology. We need to hope when we are in a positive trade, because then we stay longer, and get extremely paranoid when the trade goes against us. Yay!
You mean this one?
Yes. Yeah. I mean, who didn't read it, right? I think it's so wonderful. But I love Disciplined Trader. I love many other books that I read. So
the Mark
Douglas.
Mark Douglas and Paula Webb, his wife,
Mm-hmm.
with the Disciplined Trader. It's almost impossible to find a copy of that anymore with the workbook, but I do have that, and just absolutely is a life changer for traders.
Nice.
And then Mike's book is also great, and my book is also great. Also, Trade Your Way to Freedom, and Mike's book, Trading Mindwheel. That's the way we pay the rent. No.
Amazing.
And so, and again, so Lia, if people want more information from you, where do they go? So
my website is called Trading Mindset and Data. Simple, long, but simple. And I'm on X and StockTwits. StockTwits is Trading Mindset and Data. We post trades every day. And then I'm on X, Lia the Trader, or Instagram, always with the check mark, because there are a lot of fakes stealing my pictures. So yeah, that's where people can find me.
And so, no, and that's awesome. And guys, what we'll do is basically, where's the camera? There it is. What we'll do is we'll put the links to how you can contact Lia down in the descriptions over on Spotify when Mike posts up this podcast there, and we'll have it over on the YouTube channel where you can find it also there. And so, Lia, I know you got a bug out. We're gonna, but you have any questions? I'm leaving this. You have 2 seconds. What, any questions for Mike and I?
Well, I was just like curious if after like you traded 5 years, your strategy improved even more after, like, you guys been trading for a long time, right? So like, let's say after 5 years, you found even something better, and you are constantly learning and improving, or are you sticking with something you learned a long time ago?
Go ahead, Mike.
For me, it took me 10 years before I finally found O'Neill and Can Slim and everything. So I'm on the more stubborn end of it. But once I finally did find O'Neill's strategy, and then when I found the New York City IBD meetup, and I saw that, you could trade this in a way that fits you. You don't have to just treat how to make money in stocks, like a cookbook. That really opened my eyes, and that's when I was able to start making some real progress.
Nice.
Yeah. Yeah. And for me, it basically took me about 10 years to develop my system, if you will. Then took another 10 years after developing the system to learn how to trust the system and trust myself to execute the system. And, and then the last part of your question was, do I continue to refine? And the answer is that the very little on the system itself. I don't have to refine that a lot. Other minor tweaks, but where my major refinement is in my own behavior. How well do I execute my system, and how can I get better at that? How can I improve my routine? How can I basically eliminate the things that would make me an impulsive, compulsive trader? And I do that through my process, focusing on the process rather than the outcome. And I really like to utilize things like James Clear, who wrote the book Atomic Habits. I love his approach to focus on the process, not the outcome. And it's about who you become. You become a great trader, and it's mindset and what's in your heart. I believe, and that's how Dennis, the OG focuses on.
Nice. Thank you so much. It was really nice being here with you guys and have this chat. I really enjoyed it. And thanks for everyone for coming. And now I hope to speak to you again at some point.
Okay, excellent. And so, okay, guys, Mike and I are going to be sticking with you because we've got a couple of other things to be talking to. So, Lia, thank you so much. It's a blessing. And I just look forward to following you over on X and your other social media areas. And
thank you. All right. Thank you so much.
Okay. Aloha and God bless.
Aloha. Bye. Bye.
Bye. All right. Lia the Trader, everybody.
Wow. Lia the Trader. Wow. What interview, Mike. That was just wow. Thank you so much for so thank you so much.
Yeah, going to these conferences and meeting people in person, it pays off.
I got to figure out a way where I can do that. Maybe once we get once Michelle and I are living part-time back on the mainland up in Idaho, maybe I can. But of course, there's not too many traders up in Idaho, or is there? I don't know. But I envy you to some extent because there you are on, because you're right in the hub of where a lot of things happen. Now, I don't envy. Because I couldn't survive like in the city, like or in around a big city like that, because I'm more of a country kind of guy, and I like it. I like it out here on my mountaintop in Hawaii.
Yeah, I was gonna say, I feel real bad for you, but I don't. Living out in Hawaii, middle of paradise.
And so, you and Melissa and Lily need to come over here and visit with us sometime. So,
looking forward to that.
What are some of the, and guys, if you're watching online, let us know what, if you want to help us more than anything, start leaving some comments. I mean, seriously, because that's how things are. It feeds the algorithm, and I'm not trying to be. I'm not trying to be self-promoting, but dadgummit, we want to get the word out about AutoPilot, not AutoPilot Trader, but about trading truths. And then Mike's business, my business, of course we do, because we want to help other traders. And so help us help other traders, including yourself. So if you could, down in the comments, just say, what part of Lia's interview really hit you? And then Mike and I'll just, what about you, Mike? What part of the interview hit you?
Yeah, the switching systems and being open to switching systems. I think that So often we'll hear about, you shouldn't system hop. And I think that's true. I think that you shouldn't like just try a system for a couple of weeks and then just toss that one and then move on to the next one and move on to the next one and move on to the next one. But I think that there is something to be said too for finding something that actually does fit you. And that's the part that what Lia was honed in on, not the just switching your strategy the moment that the market shifts, but it's finding a strategy that fits you, that you're able to execute well. And that's more of the mindset. And when we had asked these questions early on, I was thinking, do we have a little bit of a debate going on here? But no, I don't think so at all. I think that it was more aligned than I thought that we would be, where it's finding a strategy that aligns with you, your personality, your goals.
Yeah, I agree with that. And a lot of what Lee had to say basically is intertwined in our systems, the way we have set things.
All of a sudden. There's some heavy duty static all of a sudden.
Is it on my side?
Yeah.
Okay. I hate it when it does that. Hold on a second. How about now?
Yep, still there.
Hold on.
Alrighty, so let's see. Other lessons from Leah. Let's go through the top here. So there was also the technical indicators guaranteeing winning trades. Yeah. So one of the things that I like to look for is this multiple time frame confluence, right? So I think one of the things that she was mentioning that she's a day trader, and so she'll execute on 1 minute charts, 5 minute charts. As a swing trader, I'm looking at some intraday stuff too. I'll look at a 30-minute chart, but I also like to look at daily charts and weekly charts and sometimes even monthly charts too. And what I like to find is when you have multiple time frames lining up all at the same spot, that's one of the things that draws more eyeballs to that particular trade. And it's one of the things when you're a momentum and a breakout based trader that tends to help the trade work a little bit more. Dennis, how about you? Can't hear you. Nope, not yet. You can do some hand signals. We could do a session on sign language. Oh man, yeah. That's what happens when you have the live shows, right? All right. So the last, yeah, Dennis. Well, just keep trying, and when you jump in, you'll jump in. So I think that last one too, with managing risk, man, oh man, that's one of those things that it can't be overstated, right? I think that if we focused more on managing risk, you would have so many people that would be able to be successful at this game and actually be able to stay in the game longer term. Because like Leah was mentioning earlier on, right? She had this incredible run. She made $500,000 and then gave back almost all of it the following year. Simple risk management can really help in that regard. I was coaching somebody a couple of years ago when Bitcoin had made its initial run, and this guy was part of the initial run. Well, I think that at the time the all-time high was about 70 or 75,000. That he was all in on Bitcoin, just rode the whole thing up and then rode the whole thing right back down. And it's so sad because there's ways that, like very simple ways that you could put into place to help manage risk and to help lock in profits. And so it's not just about the amount of profits that you have on paper, but it's also about the amount of profits that you take home that you put in your pocket. And that's true whether you're going to be day trading like Leah, or whether you're swing trading like Dennis
Yeah.
and I.
Yeah. So
Oh,
can you hear me now?
there you are, Dennis.
All right.
Perfect timing.
So no, I agree with that wholeheartedly. And the thing that, maybe this is a myth that we bust in the future, is there is a lot of crypto traders out there, Mike, who don't think, who do not believe that technical analysis and technical signals work trading crypto. And, I mean, I'm sorry, but I have to run up the BS flag on that and just say, that's baloney. I did a video, gosh, back in January, right? Talking about trading Bitcoin.
Okay.
And I had done my analysis on it. And Bitcoin was up about, I think it was about $100,000 at the time. And in that video, I said, well, this is topping, and we're going to basically do a pullback. I go, I'll wait to buy buy Bitcoin until it gets down to my target price, which was $75,000. Well, guess what? By March, it was down to $75,000. Now we're back up to 100,000. So, do I feel good about gaining that from $75,000 to $100,000 profit? You betcha I do. But yeah, and so coach, there's this, and I don't know if I don't know if you could help folks with, or it's just something they have to basically learn on their own, that how to manage the risk, and that managing risk is not only a good thing, it is probably one of the most important things that they could do if they want to trade long term, because they're not buying whole guys, right?
Yeah, to answer the first part of the question, I think that there's some people that you can teach, and there's some people that, unfortunately, are the type of people that need to learn things the hard way.
Okay,
I think that,
you mean like you and me, like
some
you
of us
and me.
have both parts of that in us, right? I think that both of us, you and I, have both parts of that in us. Both of us learned many of these trading lessons the hard way. Personally, I wish that wasn't the case. I wish I'd be able to just learn lessons a little bit easier, and I'm getting a little bit better at that. Taking advice and being a little bit more coachable, being less pig-headed. But some people need to learn things the hard way, and hopefully those people that learn the hard way actually learn the lessons from the actions that they're taking.
Yeah, and the thing about it, like you said, learning the hard way is painful. And the thing, and I don't know if this speaks to you or not, this one of the things I have to be very careful with, even now, because that stubborn streak still crops up its ugly head occasionally, and can cause me, it leads me to being impulsive or compulsive in my approaches, and also can lead me to be what I'll call sloppy in my execution. And taking one of those, well, it's close enough attitudes. And let me tell you, folks, like I believe in trading price zones, but let's say it's a 50-cent price zone, because I found that doing that enables me to get into more trades and also take profits on more trades. But if it took me the longest time to get to where I would trade the price zones, because I wanted to be so precise and determine, okay, no, I want to buy it at $50.50, not $50.60. And so I wouldn't have a little range there. And so it kept me out of a lot of good winning trades because of my stubborn attitude. And that's something that, while my system was very successful before, once I adapted and adopted this new way of doing things, it actually made it more successful. But why did it take me so stinking long to get to that concept. It was like, oh, I might lose 2 or 3% or 4% of my potential profit, was the thought that was inside. So,
Yeah. Here's a thought that I had. It's almost like you're becoming a master sculptor, right? So here's Dennis learning how to sculpt his masterpiece here. And early on, Dennis might have a chisel. He might be tapping away, but he doesn't quite know where to tap. So you might be hesitant to tap the wrong spot because you might chisel off the nose or an ear from the sculpture. But now that you have the experience and you could kind of be a little bit more artistic because you know what you're doing, now you're comfortable to say, you know what, like maybe that extra little buffer here is okay.
Right.
And maybe that's part of what gave you the confidence. I don't know. You tell me. Well, what do you think about that?
Yeah, I think that's a great analogy, and I think as we refine our trading strategies and our trading systems, you do become, like Lia mentioned, that trading is an art. Well, I think it's both an art and a science combined.
Yeah.
But I have to also not leave room, but I also have to recognize also that occasionally I don't pick up the chisel and hammer to do the fine work. I pick up a jackhammer. Okay, and let's say it gets the job done of chiseling the stone, but the aesthetic value of the jackhammer is clearly not nearly what the aesthetic value is of the precision with the chisel and the hammer. But, but that's my personality, and it's so funny. You've taken personality test, right? Michelle and I, as you know, we are marriage mentors, and what we do is people sign up and they take a marriage assessment, and then we walk them through their marriage assessment. And part of within that assessment is a personality test, right? Kind of like a DISC type of test. And so then you kind of coach people through that prior to getting married, so they can at least understand what brings them together, what'll make them stronger, but also highlight some of the potential landmines that they can avoid. And it's nice, I mean, I wish I would have had that when I first got married, because we would have probably avoided a lot of the trouble and hardship we had during the first 8 years of marriage. But Michelle and I, we had taken the assessment ourselves, and as a facilitator and somebody who goes through the assessment with the other people, Michelle and I took a look at ours, and oh my gosh, we're like polar opposites. I mean, in so many different ways. I'm the risk taker, she's not. She's the quiet person, I'm not the quiet person. And so it's very interesting. And the reason I tell you the story is we have to recognize that our basic personality will drive a lot of how we approach life, how we approach trading, and that type of thing. And so if we recognize what our strengths and our weaknesses are of that personality type, then I think that's when we can start constructing a new set of habits that will make us a better trader, and also a better husband, a better business person, because we've learned how to not avoid, but downplay the weaknesses and upplay the strengths of that. And like Michelle told me, she says, yeah, you're louder than I am. And she says, for our relationship to work better, you need to tone it down a little bit, because she doesn't like loud noises. And I'm a loud, noisy guy. And so knowing that now, I have a choice to make, right? the choice is I can either tone it down and have a very happy wife, or I can continue on my way and my wife's not going to be as happy with me. And so what do you think the wise decision is for me to make?
Probably to tone it down a little bit.
Yeah, exactly. Yeah. And I think we approach those similar type of decisions with our trading is what's the one or two things I need to do in my trading to make me a better trader. And so I'll leave you with one last quote.
All right. Lay it on us.
This is a good quote. It's by Jim Rohn. Jim Rohn says that basically success is basically a series of disciplines. Success is a series of disciplines repeated daily. And I'm paraphrasing here, and then so if that's what success is, what's failure? Failure is a series of poor decisions made every day.
Yeah.
Wow. That's pretty good. So anyway, well, hey man, we
good spot to leave off.
So we've asked the folks, which of the 3 myths that they, is still showing up in their trading. Be honest. Lay a comment or DM either Mike or I, and we can chat about that. We'd love to have a chat with you about, hey, what's hanging you up with your trading? And if any of this has hit home, share this with other traders who need to stop chasing, start refining, and build a path they actually trust going forward. And so the thing that I loved about what Lia also said, she mentioned 2 things: short runway, long runway. And then she said that when she first got started, she was losing all her beans. I've never heard anybody refer to, having losing trades of losing your beans, but that was brilliant. So any last and finals, Mike?
Yeah, no, I think that's it. So thank you all for being here today. It was an amazing show. Thank you to Lia for joining us today. And well, what do we got coming up next week?
Next week, oh gosh, we're going to be digging into just absolutely a belief that you have to follow a bunch of different stocks or ETFs. In other words, your watch list has to be huge in order to find success. Where in reality, laser point focus will actually generate more winners. Does that sound good? I like that.
Yeah. That's what's worked for me. I believe that's what's worked for you. And so hopefully we could get that working for a few more people next week.
Awesome. So aloha. God bless everybody.
God bless. Take care.